Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. Today is September 24th, 2025, and we're diving into, well, a really contradictory set of sources today, all focused on digital assets.
Contradictory is definitely the word.
We've got this fascinating collision happening. On one side, you see these immediate financial indicators kind of screaming recession nerves.
Yeah, big retreats, investor pullback.
Exactly.
Yeah.
And then crashing right into that are these massive long-term institutional commitments being made. Some are calling it the biggest news of the year.
It's quite the split, and you see it in the immediate numbers too, right? Global market volume, it's down a bit, 0.60%. Just dipped below that 4 trillion mark. We're sitting at $3.96 trillion.
It's just under. And
That's
sentiment.
right in the middle. Score of 40. Neutral, but maybe a nervous neutral, you know?
Feels like the market doesn't know which way to jump. A bit of a split personality. There's tension, uncertainty.
Yeah.
But underneath all that, there's this huge amount of building happening, almost out of sight.
The infrastructure track. Yep.
So that's our mission today. Let's unpack what these big players are actually building sort of beneath the surface. And crucially, how is the current geopolitical mess linked to investor confidence right now? Okay, so let's tackle that immediate tension first. Those cold, hard numbers driving that nervous feeling. The big one seems to be these crypto ETF outflows. That's a reversal, isn't it?
It is, and it's definitely worrisome according to the sources. We've had months of steady inflows, institutional money coming in now. A sharp turn.
Sharp. What are the figures?
We saw a combined total outflow of $439 million. Just today, that's nearly $500 million heading for the exits.
Wow. Okay. And where's that coming from mainly? Bitcoin?
Bitcoin ETFs took the biggest hit, yeah. $363 million out. But Ethereum ETFs weren't immune either. They shed about $76 million.
Right. And It's important for you listening to remember these ETF movements, they're often seen as a kind of proxy, right, for what the big institutional investors are feeling.
Exactly. It's one of the clearest windows we have into their immediate confidence. Big money leaving, like that signals a definite dip.
But the sources don't just leave it there. They're drawing a direct line from these outflows to, well, to global stability or the lack of it.
Yeah, absolutely. There's a lot of focus on macro level stuff. We had President Trump addressing the UN last night, and the commentary we're seeing zeroes in on him, basically blaming the UN for inaction on the wars, Russia, Ukraine, Israel, Palestine, the ongoing conflicts.
Okay, so let's connect those dots. Why does trouble in, say, Eastern Europe suddenly make institutions pull money from a Bitcoin ETF? What's the link the sources are making?
Well, the thinking is that investor confidence is really tangled up with hopes for peace deals. As long as these major conflicts drag on, you get global uncertainty.
Which means energy problems,
Yeah.
supply chains, inflation.
All of it. Continued energy insecurity, supply chain snarls, and, yeah, stubborn global inflation.
Yeah.
And when inflation stays high, what do central banks do?
They stay hawkish, keep rates up.
Exactly. Higher rates make riskier assets, like crypto, look much less appealing compared to something safe that pays interest, like government bonds. So that $439 million outflow, it's the market reacting, saying, we don't see global stability coming anytime soon.
So the market's basically holding its breath, waiting for good news on the geopolitical front, peace agreements. And the expectation is that that would be a massive trigger.
A huge trigger, not just for crypto, but stocks, even gold prices too. That's the narrative in the sources.
All right, now let's completely switch gears. We started with the fear, the outflows. But while headlines are focused on wars, some of the biggest financial names are quietly pouring concrete, building foundations.
Yeah, and this next piece, I mean, some sources are calling this probably the most important news in 2025, so it's worth paying attention.
Okay, lay it on us. Who and what?
We're talking about a major tokenization project for really big players involved.
Yeah.
Ripple, Securitize.
Securitize. They're big in tokenization, right?
It's huge, a leader in the space.
Oh, yeah.
And then the financial giants, BlackRock and VanEck.
Okay, Ripple, Securitize, BlackRock, VanEck. What exactly are they doing together? What's the function?
It's all about tokenizing real-world assets, RWAs, specifically treasury funds from BlackRock and VanEck. Ripple's involved with their stablecoin, RLUSD.
The Ripple dollar stablecoin. Okay.
Right. So using smart contracts that Ripple and Securitize enable, investors holding shares in these tokenized BlackRock or VanEck treasury funds can basically swap them instantly for RLUSD.
Instantly. So you skip the usual bank delays, the T+2 settlement stuff.
Exactly. No waiting for banking hours, no multi-day settlement. You get a stablecoin, RLUSD, as an immediate 247 off-ramp.
Okay, that is interesting. A 247 off-ramp for tokenized treasuries.
That's the why it matters part. It massively boosts liquidity for these things. It improves access for DeFi applications, and it delivers real enterprise-grade utility. You're taking one of the most conservative assets out there, government debt, and making it liquid and usable around the clock.
It sort of proves the case for regulated stablecoins in that institutional world.
Precisely. And speaking of the players, Securitize, you mentioned they're big. The sources highlight them as like an OG in this RWA space.
An original gangster?
Yeah, basically a world leader. They're already managing something like $4 billion in tokenized assets. And they work with other huge names too, like Apollo, Hamilton Lane.
Serious players.
Yeah.
And the Ripple stablecoin, RLUSD. What's its status?
It's backed one-to-one with U.S. dollar assets, importantly, and it's regulated by the New York Department of Financial Services, the NYDFS. That's a major U.S. regulator.
So fully regulated, dollar-backed.
Yep, and this deal marks the first time RLUSD is integrated onto Securitize's platform. That's a pretty big vote of confidence for Ripple's stablecoin and its future use by institutions.
Okay, so that's a huge specific deal. Let's zoom out a bit now. Look at the wider regulatory picture, geographic trends, things that signal maybe institutions are getting more comfortable for the long haul. What about the U.S. regulators?
Well, there seems to be a definite shift happening, or planned at least. Under the current administration, SEC Chair Paul Atkins announced plans for something called an innovation exemption. They're aiming to introduce it by the end of this year.
An innovation exemption. What does that actually mean?
It's significant. The goal is to let crypto companies launch new digital asset products without getting immediately tangled up in what the sources call outdated security laws written long before crypto existed.
So it's like the SEC saying, okay, our old rules don't quite fit this new tech, so here's some temporary breathing room while we figure out better tailored rules.
That seems to be the gist, yeah. The consensus is it signals a move towards a more flexible, modern framework. And apparently there's some push from U.S. legislation supporting this direction, too.
Interesting. More flexible regulation potentially coming. And this is happening just as Wall Street keeps marching in, right? We saw news from Morgan Stanley.
Absolutely. Morgan Stanley's e-trade platform, huge name in online brokerage.
Yeah, massive retail presence.
They're planning to offer direct trading in Bitcoin, Ethereum, and Solana. Not futures, actual spot trading, by 2026.
Wow. BTC, ETH, and SOL on E-Trade. That's a big step for accessibility.
It really is. It's a major commitment to serving their clients directly in the digital asset market. And they're doing it through a partnership with a company called Zero Hash.
Zero Hash.
Yeah, they provide the back-end stuff, the wallet solutions, the trading infrastructure needed to make it happen for E-Trade's customers.
Okay, so the U.S. is seeing regulatory easing and big players like Morgan Stanley moving in. But it's not just the West, is it? The sources point to some really interesting developments elsewhere. Kazakhstan, for example.
Yeah, Kazakhstan is moving surprisingly fast, actually. They already launched their own central bank digital currency, the Digital Tenge, back in 2023, a CBDC.
Right, I remember that.
The National Bank of Kazakhstan has just launched the country's first bank-issued stablecoin. It's called KZE, and it's built on the Solana blockchain.
Hold on. A commercial bank stablecoin, not the central bank CBDC, running on Solana.
Yeah.
A public blockchain.
Exactly. That distinction is key. It's issued by a regulated bank, Eurasian Bank, in partnership with MasterCard and another firm, Intex, using Solana. Well, that's a pretty bold technical choice. A big vote of confidence in public chain technology for regulated financial instruments.
That is fascinating. Using public rails for regulated money. And this fits into that broader theme we keep seeing, the Middle East really pushing to become a global hub, right, for digital finance AI.
Definitely. Two big developments highlighted there. First, Tencent Cloud in Saudi Arabia.
The Chinese tech giant.
Yep. They're pumping $150 million into expanding their presence in Saudi, setting up a new data region in Riyadh. The plan is to make Saudi their main gateway to the whole Middle East and North Africa region.
And the focus is?
Heavily focused on AI services. It ties directly into Saudi Arabia's Vision 2030 plan, their push to build a digital economy.
Okay. And the second Middle East development, something in Abu Dhabi.
Right, the financial platform Azor. They provide access to all sorts of investments, crypto hedge funds, tokenized real estate, the works. They're moving their global headquarters to Abu Dhabi.
Why Abu Dhabi?
They're seeking a license from the FSRA, the regulator within the Abu Dhabi global market, the ADGM. For you listening, the ADGM is one of those special financial free zones with its own independent rules.
Okay. So they see the regulatory environment there as better.
Apparently so. Azor manages over $370 million in assets, mainly for family offices and protocol treasuries. They're choosing ADGM because the sources suggest it offers a more robust and attractive regulatory setup compared to maybe where they were licensed before, like parts of Europe.
What a contrast indeed. We've gone from fear to foundations.
Yeah.
But that core tension is still absolutely there, isn't it? The daily numbers, that $439 million outflow, it screams red September, fear. But then you have these foundational deals, BlackRock, Ripple, Morgan Stanley, and the regulatory shifts in the U.S., Kazakhstan, the UAE, all moving incredibly fast.
Okay. It really puts the focus back on those two competing drivers of confidence we talked about. Geopolitical peace versus this steady institutional infrastructure build-out.
Right.
But the sources add an interesting wrinkle to the geopolitics part. They kind of suggest that the ongoing drama, the wars, they probably won't cause prices to fall much more.
So the bad news is already baked in. The market's kind of priced in the chaos.
That seems to be the view. It's not that more bad news won't hurt, maybe, but the real mover now would be positive news, the anticipation of peace deals. That's what's directly linked to an expected price pump.
Because that removes the uncertainty holding capital back.
Exactly. Investors feel they can jump back in confidently once that political overhang is gone. So, yeah, the long-term path might be paved by the infrastructure being built, but the short-term bumps and jumps seem totally hostage to political headlines right now.
Which brings us to that final provocative thought for you, the listener, to chew on. The sources clearly show that right now, immediate investor focus is glued to geopolitical stability. Peace deals needed for confidence to return. But at the same exact time, you have this massive, quiet commitment from trillion-dollar companies, BlackRock, VanEck, Morgan Stanley, and regulators across the globe building the actual plumbing, the infrastructure for the future.
The quiet build versus the loud headlines.
So the question is, which factor do you think will ultimately have the greater, longer-lasting impact on how digital assets are valued? Is it the political resolution of current wars, or is it this steady, almost invisible institutional adoption and infrastructure build-out happening right now?
Definitely something to think about. Which force wins out in the long run?
Indeed. Well, thank you for joining us as we went through the sources on this. We will catch you next time for the deep dive.